What if everything you've been told about getting rich in crypto is wrong? What if the biggest fortunes weren't made by people who bought Bitcoin in 2011, or caught the perfect meme coin, or got lucky with a once-in-a-lifetime trade? What if wealth in crypto isn't created by luck at all, but by seeing opportunities that everyone else ignores? For every investor who turned a few $1,000s into millions, there are thousands more who lost everything chasing the exact same dream. Yet one investor believes there is a completely different path. A path that doesn't rely on predicting tomorrow's price. A path that doesn't require gambling on the next viral token. A path built on knowledge instead of hope. His name is Jason Choi. And his approach may completely change how you think about building wealth in crypto. Because according to Jason, the people who consistently win aren't the smartest traders. They're the ones playing a different game entirely. And once you understand that game, you'll never look at crypto the same way again. Every bull market creates new millionaires. Social media celebrates overnight success stories. Screenshots of impossible gains spread across the internet. People begin believing they simply need to find the next Bitcoin. But here's the question almost nobody asks. If luck is the reason people become rich, why do some investors seem to do it over and over again? Why do the same names keep appearing every cycle? Why are certain venture investors consistently early? Why do some founders repeatedly build billion-dollar companies? And why do most retail investors always seem to arrive just as the opportunity disappears? Jason Choi believes the answer isn't hidden inside charts. It's hidden inside information. More specifically, who discovers valuable information before everyone else? Throughout this documentary, we'll explore how Jason Choi built his investment philosophy, why he believes most crypto investors are playing the wrong game, and the framework he uses to maximize upside while minimizing reliance on luck. Because if he's right, getting rich isn't about predicting the future. It's about preparing for it better than everyone else. Crypto has always looked like a casino from the outside. Prices swing 20% in a single day. Unknown projects suddenly become worth billions. Meme coins appear out of nowhere. Fortunes are made while people sleep. And fortunes disappear just as quickly. To outsiders, it feels random. Almost impossible to understand. But the people operating inside the industry often see something completely different. Behind every successful blockchain network, every major protocol, every billion-dollar startup, there were years of research, engineering, community building, fundraising, and execution before the market noticed. That's where Jason Choi built his career. Long before becoming the co-founder of Tangent, he became known as one of crypto's most respected investors and researchers. Instead of focusing on daily price movements, he spent his time studying founders, developers, token economics, incentives, and market structure. He wasn't asking, will this coin go up next week? He was asking, is this building something the world will eventually need? That simple shift changes everything. Because markets often confuse popularity with value. Jason's philosophy starts with a powerful realization. Price is visible. Value is hidden. Most people chase what's already moving. Professional investors spend their time searching for what hasn't moved yet. That difference sounds small. But over years, it creates enormous gaps in wealth. And here's where things get interesting. Jason argues that crypto is one of the few industries where informational advantages still exist. Unlike mature financial markets where thousands of analysts cover every company, crypto moves too fast. Entire industries appear in months. New technologies emerge every week. Most people never have enough time to understand what's actually happening. That creates opportunities. Not because markets are easy, but because they're inefficient. The people willing to learn deeply often discover opportunities long before the crowd arrives. Jason Choi often emphasizes an idea that separates professional investors from gamblers. They don't try to be right all the time. They try to be right when it matters most. Most beginners think investing is about having a high winning percentage. Professional investors think differently. Imagine making 10 investments. 8 fail completely. 1 barely succeeds. But the final investment becomes worth 100 times your original investment. Overall, you still become incredibly wealthy. This is called asymmetric investing. Small downside, massive upside. Instead of asking, "Will I win this trade?" Jason asks, "If I'm right, how big can this become?" That question completely changes decision-making. It encourages patience, research, independent thinking, and emotional discipline. Because the biggest opportunities almost never look obvious when they first appear. In fact, they're often uncomfortable. They're ignored, sometimes even ridiculed. History shows this pattern repeatedly. The internet, smartphones, artificial intelligence, Bitcoin, Ethereum, each looked irrational before becoming inevitable. The crowd laughed first, then questioned, then copied. Professional investors understand that by the time everyone agrees, most of the easy money has already been made. But here's where Jason Choi's philosophy becomes even more surprising. He doesn't believe information alone creates wealth. Everyone has access to information. Podcasts, YouTube, Twitter, research reports, newsletters, artificial intelligence. Information is everywhere. Attention isn't. Most investors consume endless content every day. Very few actually develop insight. Jason believes the real advantage comes from connecting information before others do. Think about it. One developer tweet means very little. One funding announcement means very little. One governance proposal means very little. But when dozens of seemingly unrelated events begin pointing toward the same trend, a completely different picture emerges. This is where many of the biggest opportunities begin. Before markets explode, signals quietly accumulate. Developers become more active. Infrastructure improves. Institutional interest increases. Capital slowly enters. Founders begin building. Then suddenly, everyone notices at once. From the outside, it appears the project exploded overnight. In reality, the groundwork may have been developing for years. Jason's edge comes from studying these early signals rather than waiting for price confirmation. That's an important distinction. Markets reward people who arrive early, not people who arrive confidently. So how does someone actually build wealth without depending on luck? Jason's philosophy can be understood through one simple principle. Create your own edge. Most people compete where competition is highest. They buy after influencers recommend a token. They chase trending narratives. They react to headlines everyone has already seen. They're making decisions using information that's already reflected in price. Jason does the opposite. He spends more time understanding people than prices. Who are the founders? Can they execute? Does the team understand incentives? Is there genuine demand for what they're building? Are developers choosing this ecosystem voluntarily? Is the product solving a real problem? Is the market underestimating its potential? These questions rarely generate instant answers. But over time, they build conviction. Conviction is what allows investors to hold through volatility while everyone else panics. This is one of the greatest hidden advantages in investing. Knowledge reduces emotional decision-making. When you truly understand why you own something, temporary price swings become easier to ignore. When you don't, every market correction feels like the end of the world. Jason also believes investors should continuously upgrade themselves. Markets evolve. Technology evolves. Narratives evolve. The people who keep learning maintain their edge. The people who stop learning eventually become the exit liquidity for those who didn't. Perhaps the greatest lesson is that wealth compounds far beyond money. Knowledge compounds. Relationships compound. Reputation compounds. Experience compounds. And these forms of capital often produce financial wealth later. The richest investors aren't simply collecting assets. They're collecting advantages. Of course, no investment philosophy guarantees success. Crypto remains one of the most volatile asset classes in the world. Projects with strong technology can still fail. Regulations can change unexpectedly. Security breaches can destroy confidence overnight. Narratives can shift faster than anyone expects. Even the best investors make mistakes. Jason has openly acknowledged that investing is a game of probabilities, not certainty. Being thoughtful doesn't eliminate losses. It helps improve decision-making over the long run. There's another risk many people ignore: overconfidence. Finding one successful investment can convince someone they're a genius. Markets have a way of punishing that belief. The most successful investors remain humble because they know uncertainty never disappears. The goal isn't perfection. It's consistently making better decisions than the average participant. Over years, that difference becomes enormous. Perhaps the greatest myth in crypto is that wealth belongs to the lucky. Jason Choi's philosophy challenges that idea completely. Luck will always exist. Timing matters. Unexpected events happen. Markets surprise everyone. But luck favors those who spend years preparing before opportunity arrives. The investor reading research while everyone else is scrolling. The founder building during a bear market. The developer solving problems nobody notices yet. The analyst connecting signals before they become headlines. These people may appear lucky from the outside. But what looks like luck is often invisible preparation. As the crypto industry continues to mature, the easy opportunities of the past may disappear. But new ones will inevitably emerge. The question is whether you'll be chasing yesterday's winners or quietly studying tomorrow's. Because in the end, getting rich in crypto may have far less to do with finding the perfect coin, and far more to do with becoming the kind of investor who no longer needs luck at all. But there's one final lesson that may be the most valuable of all. Most people think getting rich is about finding the next opportunity. Jason Choi believes it's about becoming the kind of person who can recognize opportunities before everyone else. Those are two very different goals. One depends on luck. The other depends on growth. Every market cycle creates a new wave of investors convinced they've found the secret formula. They chase leverage. They follow influencers. They copy wallets. They jump from one narrative to the next, believing the next trade will change their life. Sometimes it works. Most of the time, it doesn't. Because copying someone else's conviction is not the same as building your own. Real conviction comes from understanding something deeply enough that you can stay calm when everyone else is emotional. Think back to every major innovation in history. The internet, smartphones, cloud computing, artificial intelligence. Each one went through the same cycle. At first, almost nobody cared. Then critics declared it was a fad. Later, excitement turned into speculation. Eventually, the strongest companies survived, while thousands of weaker projects disappeared. Crypto is no different. The biggest fortunes may not come from predicting the next headline. They may come from patiently identifying the technologies, founders, and networks that continue creating value long after the hype fades. That's the difference between chasing trends and investing in transformation. And perhaps that's why Jason Choi spends so much time studying builders instead of price charts. Because prices tell you where the market has been. Builders often reveal where it's going. Years from now, most of today's tokens will likely be forgotten. Entire sectors may disappear. New technologies we can't even imagine today will emerge. But the principles behind long-term wealth will remain remarkably consistent. Stay curious. Think independently. Invest in knowledge before investing in assets. Focus on asymmetric opportunities. And remember that your greatest edge isn't a secret trading indicator or a lucky prediction, it's your ability to see what others overlook. In a world where information is available to everyone, wisdom becomes the rarest asset. And those who continue learning, questioning, and adapting will always have an advantage over those chasing shortcuts. Because the real secret to getting rich in crypto isn't finding the perfect investment. It's becoming the kind of investor who can recognize extraordinary opportunities long before the rest of the world sees them. When that happens, what looks like luck to everyone else is simply the reward for years of preparation. And that's a game worth playing.